Good morning, ladies and gentlemen. My name is Greg McGlosky from ForexLive.com. Today's date is October 20th, 2022. This is the morning Forex report. We had PM Liz Truss resign in the UK. That has sent the pound to a new high today, but then it has backed off and now trades negative. So let's get into the markets, take a look at what the technicals are saying. We'll start by taking a look at the pound versus US dollar. Looking at the hourly chart, the move to the upside on the rumors of her resignation sent the price above the 100-hour moving average at 1.12751. The price has since dipped back below that moving average and currently trades at 1.1260. That still remains above this area through here, where we had a number of different swing lows and swing highs going back in time. More recently, we found some lows this week through that level, and in trading yesterday, we moved down, tested the 200-hour moving average, and in the early London session, the price did move below the 200-hour moving average briefly, only to rise back above that level. So with the price now continuing between the 100-hour moving average and 200-hour moving average below, and this swing area between, the bias is still somewhat neutral. We are seeing just a little bit more upside because we are higher on the day, and we did fail below the 200-hour moving average, but we also failed above the 100-hour moving average. So markets are still trying to figure out which way it wants to push for this currency pair. Move below the 100 is more bullish. Move back below into this swing area, and below the 200-hour moving average would be more bearish. Looking at the euro versus US dollar, it too followed the pound versus US dollar to the upside here in the late London morning session. That took the price above the 50% retracement and above the swing area through here, where we had a number of different swing lows and highs at different points along the last month or so of trading. You can see here we had a nice little floor here before breaking to the downside. Kind of got all choppy here, but reestablished support against that area, and then reestablished resistance against the area through here and here before moving above that level on Monday and trying to hold support through here, only to fail in trading yesterday, move below the 100, come down, test the 200-hour moving average not once, not twice, but 3 or 4 or 5 times here before moving back to the upside, initially in trading in the early London session, maybe late European, maybe late Asian session. The price did move up to the 100-hour moving average, backed off, but then I was able to gather steam with the 38.2% as its base, moved higher, but back down, testing that 100-hour moving average as we talk. That comes at 0.9796. Holding this level would have traders looking again toward the 50% retracement to get above that level and stay above that level. A failure below the 100-hour moving average would disappoint the buyers and push the price back into the neutral area between the 100 and 200-hour moving average, 38.2% retracement in between. So that's a look at the euro versus US dollar. The dollar versus yen. We moved up to yet another high and was able to extend above the 150 level. The high price came in at 150.079 before it quickly moved back to the downside. The low price here came in at 149.59 before rotating back to the upside. We're trading above and below this old trend line here, which was broken yesterday and held the level, moving up, held the level here, fell below the level, and now is trading above and below that level. So the market's a little bit jittery, for as you might expect, for the dollar versus yen after testing the key 150 level. Currently trading 149.91 and above that old trend line. So it's hard for me to even trade or look at this currency at these levels, especially with the Bank of Japan on the sidelines, sort of waiting for that opportunity to perhaps really get the trader. So you just have to be careful. There are other currencies maybe that you can trade that would be a little bit more friendly to your stress levels, but that's your choice. The bias still remains to the upside. The dollar versus Swiss franc. We moved up in trading yesterday, a big trend type move to the upside here that took the price near the high price going back to this day right here, October 14th, and this day right here, October 13th. Those levels came in at par 65 and par 73, and the high price yesterday reached par 58 before rotating back to the downside and into this support area right here near the close, and then bouncing back higher, made a new high here. The high price came in at par 68, testing the highs from last week, in between those highs, I should say. And the market then found willing sellers against that level. Risk can be defined and risk can be limited in this area. All you have to do is sell against that area and put your stop somewhere right here. And so you're risking this much to potentially make, well, what ultimately could have been a move all the way back down toward the 100-hour moving average at the parity level right through there. So we did find support buyers against that 100-hour moving average, or ahead of that 100-hour moving average. The low price came in at 1.0005, 5 pips above that level, and rotated back to the upside. We are back above this swing area, which I'm going to still use as a barometer. We fell below it, yes, and then we moved down to the toward the next target, but back above it. So watch the par 20 to par 27 level for intraday clues. That's the barometer right now. Staying above is more bullish. Here, overall, the bias still remains to the upside above the moving averages and above these levels. So you got to just go with the bias and, understand the bias, and either go with it or not trade at all, because you're rather sell against this high. That's always an option as well. So be aware, be prepared, and I think you are. Let's take a look at the Aussie versus US dollar. They had employment numbers come out, which were a little bit weaker than expectations. Just a small gain in the number of employed with the expectations of 25,000. I think it was 0.9 thousand, or 9,000 versus 25,000, maybe a little. I think it was less than 1,000. Anyway, whatever the number was, the Aussie versus US dollar did move lower, and we moved below this low of this swing area here. Here, as you can see, it tried to hold support against that level and then broke below that level. Our low price went up to 0.6228 versus 37, and then started to move back above this swing area. The sellers turned to buyers, and the price started to rotate back to the upside, moving above the 100 and 200-hour moving average, opened the door for further upside momentum, and the price moved up toward this topside swing area, which is another key level that we need to get to and through if the buyers were to take control. This level has a number of different levels here: swing low right here, swing high right here, swing high, swing high, swing high, swing high. So you can see the keyness, the key, why it is key, I should say. I don't think keyness is a word, but getting above that level would be needed to increase the bullish bias. On the downside, the 100 and 200-hour moving average become the barometers for buyers. Traders who bought above here want to see the price stay above that level. And if it goes back below that level, we could see some rotation back to the downside as the market continues its waffle up and down in the Aussie versus US dollar. So there you have it, a look at some of the major currency pairs in this busy day as PM Truss resigns. We'll see how it all progresses. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.